Welcome to Zero. I am Akshat Rathi. This week, what the war with Iran means for the energy transition. Over the weekend, President Donald Trump announced that the US and Israel had launched coordinated attacks on Iran. The early strikes killed the country's leader alongside many members of the regime. There have been civilian deaths too, including many girls at a primary school. In response to the attacks, Iran, a major oil exporter, launched retaliatory strikes across the Middle East, killing both civilians and military personnel. Ships in the Strait of Hormuz, which carries as much as a fifth of global oil supply, have come to a halt. Qatar has stopped a liquefied natural gas facility. Saudi Arabia has shut its largest oil refinery. All of this will have ripple effects for months to come in the region and globally. So today on Zero, we try to answer the question, what will the war with Iran do to the energy transition? My guest is Jason Bordoff, director of the Center on Global Energy Policy at Columbia University. He served as a special assistant to President Barack Obama and was the energy and climate expert on the National Security Council. As always, if you have any feedback for Zero, get in touch at zeropod@bloomberg.net. And just a note, this interview was recorded on Tuesday morning, March 3rd. Jason, welcome back to Zero.
Great to see you, Akshat. Thanks so much for the invitation.
So, over the weekend, US and Israel attacked Iran, and there have been reactions from Iran all over the Middle East. What do we know so far?
Well, we know that there's a huge amount of uncertainty and risk involved in the operation. I think the U.S. President Donald Trump has offered different explanations for the objective. That's really important. And as an American, I think if you're going to put American soldiers in harm's way, it's pretty important that our leaders explain why we're doing this. Is it about regime change? Is it about the nuclear weapons, which we were told were obliterated a year ago? Or is it something else? And that's really important to understand why we're using so much capability to attack a country in the Middle East and how long this might last and what success looks like and how it might end. There's a lot of uncertainty about the response from Iran and also other countries in the Gulf and how this might escalate and how we're starting to see indications of how countries, the Iranians could retaliate. Initially, they hit U.S. military installations in a variety of Gulf Arab countries. Also some softer targets, like in the tourism infrastructure. Initially, pretty restrained in what their actions were to retaliate against energy infrastructure or water desalination plants or other things that could impose a lot of pain on countries in the region or perhaps more broadly. But even there, we're starting to see a few indications with the major Saudi refinery, Ras Tanura, and some other things that maybe those are not off limits. So what we don't really know is how long this will last and how significantly it will escalate.
So let's start with the purpose of this war, because until we know the aims, we won't know when this will end and how this will end. The stated purpose, at least from the Trump administration, is that they want to make sure that Iran never gets a nuclear weapon. The other is to try and destroy the security apparatus of Iran so that it is no longer a threat to Israel or to others. Are either of those aims achievable?
And also to overthrow what I think the administration called a bloodthirsty regime. And we should be clear, I don't think anyone is deeply upset that the supreme leader would not be in power anymore in Iran. It was a regime that imposed a lot of suffering on the Iranian people. And both parties have agreed that it is their policy that and many other countries, too, that Iran should not get a nuclear weapon. Most recently, we heard our Secretary of State give comments about how the U.S. had learned that Israel was going to strike. And in order to preempt that and minimize the casualties that might come from that, the U.S. wanted to get ahead of this, which in a sense is Israel driving U.S. foreign policy and military action in ways that some people were concerned about. So we don't really know. Obviously, there's a long history here. When I served in the White House under President Obama, initial sanctions were imposed on Iran. The sanctions were with bipartisan support and an act of Congress. So that's another issue here. Was Congress consulted? If you go to war, Congress should presumably have a role. We just had the State of the Union address not long before the president undertook this effort, and we didn't really hear an explanation for why we might be going to war in that address. And now the sanctions on Iran, which part of the role I played in the White House was really thinking about the energy implications. How do you put a lot of economic pressure on Iran without pushing up oil prices for everyone else? And years later, that resulted in an Iran nuclear deal, which was controversial. Many Republicans disapproved of. President Trump tore it up. And we know that Iran went back to rebuilding their nuclear weapons program. So there has been a stated goal to take that out. And again, that was the rationale a year ago for the bomb strikes on Iran, which we were told were quite successful. But it seems like now there's concern that maybe they were closer than people thought to being able to rebuild that. And that was at least part of the motivation here. It is hard to orchestrate regime change from airstrikes alone. And we don't really know. We've had many people in the leadership circle around the supreme leader who were killed in these strikes. He was 86 years old, so I think the Iranians were planning at some point for their own leadership change. But obviously that's not the same as regime change and democratic government coming into place or the people of Iran having a stronger say in who rules that country. And we seem pretty far away from that right now.
So far, we haven't mentioned energy, but we have seen that past U.S. military interventions have been tied to energy in one form or the other. Most recently, the Venezuelan change of leadership from Maduro to Maduro's other partners, that was explicitly stated as a desire to make sure Venezuelan oil is available to the U.S. in some form, either through U.S. companies going there or for the U.S. to sell it to other partners abroad. Maybe the Iraq war had a little bit of energy going in, if not the stated purpose, because the stated purpose was to destroy weapons of mass destruction. But of course, after that, we did have US companies making deals in Iraq for oil and gas. How much of this might be to try and get access to Iranian oil and gas assets?
Well, it seems like the risk here is in the other direction. So you're right that after the U.S. military went in and seized Maduro and brought him to the U.S. for trial, the press conference from the United States, from President Trump, put oil front and center in the rationale for that military action in a way that, frankly, I found surprising because there were many other rationales one could imagine were motivating the U.S. action. Our Secretary of State, Marco Rubio from Florida, has long been focused on the issues of Cuba and Venezuela and populations in the U.S. that really were supportive of action to remove Maduro from power. So I think there were many reasons for it, but then President Trump put front and center the idea that Venezuela, which we should remember back in the 1990s, was one of the most well-respected oil companies in the world, working with foreign partners, and was producing at quite significant levels, 3-4 million barrels a day. That's been completely decimated. The possibility that you could return, it's going to take many years, lots of money, we could talk more about that you could return to much larger oil production in Venezuela. And it seems like the Trump administration wants a more active role in how that oil is marketed and how the revenues are used by the Venezuelan government. That has the potential to bring more supply to market. I think in this case, Iran, even with the sanctions that were in place, although being loosely enforced, has been producing oil at levels close to historic levels since the Iranian Revolution. So if anything, this military action puts Iranian supply at risk and obviously puts broader oil supplies in the region at risk, all of which would be a risk to push oil prices up, which we've heard President Trump say quite clearly he is not a fan of. He wants lower, not higher oil prices. So I don't think there's too much motivation here of trying to bring more oil supply to market. Perhaps the idea is that with more U.S. control over the Iranian government, there's more opportunities for U.S. companies and maybe even for the U.S. government to be involved a little bit in how the oil is marketed and sold and the revenues used. But I think we're pretty far away from that at this point. If anything, there's just a risk to supply. And that's why prices have surged.
Right. The prices on Monday when the trading began surged by about 15%. We are at price levels now that were back in June 2025. Some say that's just not much of an increase given this region of the world produces so much of the oil, and the Strait of Hormuz is responsible for nearly 20% of the oil transport that goes out to the rest of the world. Why was the price rise not as high as many expected it might be?
I think that's the right question to ask because, yes, oil prices surged and all the headlines said energy prices went through the roof and natural gas prices even more so. I'm sure we'll come to that. But if you had said what's the mother of all worst case scenarios for the global oil market that would send prices to $150 or $200 a barrel, it would be war in the Middle East that would close the Strait of Hormuz. And right now we see war in the Middle East, and at least temporarily as a precautionary measure, traffic through the Strait of Hormuz restricted, and oil prices are around $80 a barrel. This is not a historically very high oil price, and it's quite striking, actually. And I think there's a variety of reasons for that. One is I think a lot of people in the oil market have become a little bit immune to the possibility of real significant oil supply disruptions. We have seen so many conflicts in recent years that since the oil crises of the 1970s, people would have thought geopolitical events that would have really significantly affected oil supply, Russia's invasion of Ukraine, and then sanctions and the response from Europe, the bombs and drones and missiles being lobbed back and forth between Iran and Israel, the U.S. strike on Iran. And in almost every one of these cases, oil supply has been barely disrupted. Even when Iran in 2019, I think, attacked Abqaiq, the important Saudi oil facility, Saudi Aramco did a remarkable job of getting that facility back up and running very, very quickly. So we have all of this conflict. We have a new world of geopolitical competition and disorder and fragmentation, and oil keeps flowing. So that's one thing. The second is the market's pretty well supplied. We were already expecting in 2026 that supply would exceed demand by 2 or 3 million barrels a day. There's some measure, not a huge amount, but some measure of spare capacity. And we saw OPEC plus countries on Sunday increase production a little bit. You still have strategic stocks that can be used. So there are some buffers in the system. And I think all of that are giving some comfort to the oil market. But we should be clear that, the Strait of Hormuz, a vitally important maritime strait for energy transit. And if that were to remain disrupted for more than this week or a couple of days, you're going to see oil prices go up further from here, probably to the triple digits.
Now let's come to gas, because it's not just oil that flows through the Strait of Hormuz, although that is the commodity we talk about the most. With where gas markets are, more and more of it is coming from liquefied natural gas, a lot of it being transported on these bulbous tankers. Qatar is producing about a fifth of global supply of gas. Some of the countries like Pakistan is completely dependent on Qatar imports. India gets about half of its gas from Qatar. China gets about 30% of its gas. So some countries are much more exposed to Qatar gas. And we know currently the LNG production is shut down in Qatar because the Qataris claim there was a drone attack from Iran. We have seen a much bigger price spike on the gas market here in Europe, which in the last few years has seen quite a few gas price spikes because of what happened in the Russia-Ukraine war. How do you think about the risk premium on the gas price? What are the factors playing a role here?
Yeah, it's a really important question because obviously when we talk about the Persian Gulf and the Strait of Hormuz, oil springs top of mind to people. And that's especially true in the United States because the U.S. is kind of blessed with an abundant amount of cheap natural gas and a price for natural gas that is for the most part disconnected, at least for the time being, from geopolitical events and from the world price. So you're not going to see the same increase in prices in the United States that you might see in the price of gasoline at the pump because oil prices go up. But on a global basis, the Strait of Hormuz is vitally important to flows of natural gas and particularly LNG, gas on tankers. LNG has become more important to the global gas market in recent years. The United States is a big part of that, but Qatar comes next. And of course, in Europe, which has suffered this enormous energy crisis in the last couple of years, and prices are not as bad as they once were, but they're still quite well elevated above the gas price pre-Russia's invasion of Ukraine. High energy prices are still a source of political and economic concern. There are concerns about deindustrialization as a result of high energy prices here in Europe. And we saw prices surge 30-40% when trading opened, because with the loss of Russian gas, Europe has really struggled to cope and to find alternative sources of supply. There's not as much slack in the global gas system as there is in the global oil system, frankly. You don't have same levels of spare capacity. Europe is ending this winter with quite low inventories of natural gas, maybe 20 or 30% full. The next several months would be the time you'd start to fill those, because if there's a really cold winter next winter, Europe is really going to struggle to handle that unless it can get its inventory levels full. I suspect what you'll see in response to disruptions in gas supply will be that gas prices will surge. In response to those higher prices, Europe will pull LNG supplies in from other places that might have otherwise gone to Asia. And frankly, the alternative is going to be coal. We're going to see in Asia in particular, in response to those higher prices, more consumption of coal. That's going to free up some of those gas supplies to go elsewhere. Hopefully, we can talk about this later. It'll remind people to send a signal that maybe things like energy efficiency and some amount of electrification might help with energy security in the long run. But in the near term, I think it's a real risk.
Join me after the break for more of my conversation with Jason Bordoff. If you're enjoying this episode, please take a moment to rate and review the show on Apple Podcasts, Spotify, and YouTube. Thank you. Now let's talk about the fact that what we are seeing, at least in the markets. Now this is every war is different, and the scale of this war is much bigger than what happened between Russia and Ukraine, two countries that were just sparring for very long, but they did keep at least the weapons and attacks to a regional limit. This is spreading out all across the Middle East. But in terms of the energy market, there are parallels with the Russia-Ukraine war that are worth exploring, because we've seen this kind of price spike, both in oil and in gas, show up in energy policy, in the political environment in many countries. Here in the UK, we've had a cost of living crisis conversation that's led to a change in government. That's true of many other governments around the world. What did we learn from the Russia-Ukraine war and managing these price spikes that we could apply in energy policy today?
Yeah, I think it's a really good thing to go back and look at, because again, Europe just came out of this severe energy crisis 4 years ago, triggered by Russia's invasion of Ukraine. Russia cut off most of the gas supply to Europe, but not all of it. And for a while, Russia pipeline and LNG supplies were continuing at maybe a third of the level that they were before the conflict. A month ago, the European Parliament agreed to take Russian gas to zero. And if this conflict continues and Qatari LNG is disrupted for any meaningful amount of time, I'm sure people in Brussels will be re-questioning that timeline, just because the economic effects are so dire. And so what we learned is that in any energy crisis, this is true in oil crises, as soon as oil prices go through the roof, you see politicians running around like chickens with their head cut off to find something to do to help consumers. Waive the gasoline tax, release the Strategic Petroleum Reserve. Most of the things that you need to do to increase your resilience to shocks to the global market take time. So it's hard to do in the immediate crisis, but when the immediate crisis fades, you want to stay the course and you want to do those things so you're better prepared for next time. We don't tend to do that. When the crisis passes, we tend to forget about the problem, and then we're faced about it the next time it comes around. And I think that's true in the gas market as well. So when Russian pipeline supplies to Europe were disrupted, prices went up. And because Europe had taken steps to build out some reverse flow capability, some more pipeline interconnections, and had some import capacity and built some more import capacity very quickly, it had an ability to pull alternative supplies into its market from a global market, but it had to pay a price for it. And so, since the 1970s, oil crises, when oil was not even traded as a global commodity on the NYMEX market or anything, the development over time through the 1980s in particular of a well-functioning, interconnected, deep, liquid global market, in my view, provided more, not less security. We talk a lot about independence, but actually security comes from interdependence in a global market in case there's a disruption somewhere. The gas market is starting to function more like that. It's why Europe was able to cope, because it could pull alternative supplies in. It just had to pay a steep price for it, and that's probably where Europe is right now again. In the long run, the stuff you want to be doing simultaneously is picking up the low-hanging fruit of energy efficiency, starting to think about how to electrify some uses of natural gas like heat that will put you in a better position the next time this might happen. Who knows when that might be. The problem is, as you know, because you've been writing about it and talking on this podcast for a long time about it, that takes time and it takes a lot of money up front to put those capital investments in place at a time when European countries are facing levels of debt they haven't seen since World War II, having to increase their spending on defense. There's not as much fiscal space for the kind of upfront investments you need to try to push toward electrification and the kind of energy transition that in the long run we need.
We now have a little bit of evidence that it wasn't just industry that got shut down. Of course, Germany was particularly affected by high gas price spikes, and some industry did shut as a result. But there have been efficiency gains, at least at the household levels, that have sustained. So some of the efficiency gains came through. But we did see legislation from the European Union to try and speed up its build out of renewable energy, its build out of the grid. That also had an impact on trying to reduce both coal use, because there is still significant coal use across Europe, and gas use in the market. But it is something that Europe, which has, even though its fiscal capacity is tight, still has capital to start to do. What about developing countries where there is much less room to actually spend money, and places like Pakistan and Bangladesh in those gas spikes saw blackouts much longer than people are used to, which cause all kinds of political problems. What solutions do those places come up with in these situations?
Well, we're sort of seeing it in Pakistan in real time when, we talked about the energy crisis that hit Europe 4 years ago after Russia invaded Ukraine. Europe lost a lot of its gas supply. It had to go into a global market and find other sources of supply. It pulled a lot of those LNG supplies that would have otherwise gone to Asia into Europe, again, being willing to pay a price premium, able to pay a price premium. We saw coal use in Asia go up instead, and coal prices surge in response. And then lower income countries or lower middle income countries, you mentioned Bangladesh and Pakistan, really struggled because they got priced out. And there were certain countries that struggled to afford any energy at all when that kind of response hits the global market. At the same time, Pakistan, which had a plan to kind of go big on LNG, saw in real time the potential volatility, price volatility, and exposure to geopolitical events that would come with that. At the same time that cheap Chinese solar panels were flooding the Pakistani market. So while the Pakistani government had a plan in place to build new coal and to do more with LNG, businesses and consumers were snapping up Chinese solar panels as fast as they could get them because it was the cheapest form of energy. So much so that it's starting to cause a little bit of a financial crisis in the coal sector in Pakistan, which needs to repay debt to the Chinese government for building those coal plants. In a world where energy security is back at the forefront of the conversation, top of mind for policymakers, countries are concerned about, in a world of geopolitical competition and fragmentation, energy being a tip of the spear for sources of leverage and weapons that countries have to deploy against others. How do countries build their resilience? We see the United States pursuing a policy which says we're the largest oil and gas producer in the world. So why are we buying all this clean energy stuff like EVs from China? We're going to double down on petroleum and natural gas. We can talk about whether that makes sense or not. But Europe is a huge importer. It's exposed to a volatile global market.
One of the sources I spoke to trying to understand what's happening in Iran put it this way. It's David Hostert from Bloomberg NEF who said you can look at the reaction to the war in Iran as a Rorschach test of what people want to see. If you're an oil and gas producer, you will turn back and say, this is exactly why we must invest more in our domestic resources, just the way those UK ministers were talking about exploring North Sea oil and gas. If you're an importer of fossil fuels, this is the moment you'll turn around and say, this is exactly why we need to depend on domestic clean energy resources, electrify, become more efficient. And we are going to see a lot of that playing out across many different countries. One example that I've been reporting on over the past year has been what's happened in Ethiopia. It's a low-income country, but it's made a policy change that's pretty radical, completely banning the import of fossil fuel cars. As a result, the only cars that are coming in are electric cars. And people are pretty happy right now, 2 years on, now that the charging network is starting to be put in place, because electricity prices in that country are particularly low, given its hydropower resources. How much can electric cars really contribute to trying to reduce the world's dependence on oil if this oil shock or if this type of oil shocks keep coming?
Yeah, well, we should remember about 20% of global oil demand is cars. So we need oil for lots of other things in transportation and in industry and elsewhere. And so these price effects high prices do have an effect economically, even with a higher share of electric vehicles penetrated. And we saw in Norway, which has very high rates of electric vehicle sales, oil demand didn't fall that much, and it took a really long time for it to happen because it takes time for the vehicle stock to turn over. All that said, there's been a lot of reporting about how gasoline prices in the U.S. are going to surge, and I have a Tesla, so I'm not that concerned about it. Although I live in New York, so I never drive a car anyway. My e-bike is the way I get around, and so I'm especially not concerned about it. So to the extent one was more insulated from it, that would definitely help. I do think this comes to the broader point of the energy transition, electrification, a move toward a clean energy economy, and this new world of geopolitical competition and fragmentation that we're in. Because the transition you're talking about, and certainly if things are more electrified, you still care about gas because gas is an important determinant of power prices. They're setting the power price here in the UK. Maybe oil prices will start to matter a bit less over time. But at least in the oil market, you have a pretty diversified supply base where no country is responsible for producing more than 10 to 20% of global supply. As you know, as well as anyone, when we're talking about solar panels and EVs and batteries and critical minerals, you're talking about 70, 80, 90% concentration of those supply chains in China. And so there's a different set of geopolitical risks that come about. I'm not saying we shouldn't have a transition and electrify more, but we do have to figure out how to manage those risks and how to think about it. Because what I see happening now is a lot of countries are responding to that with calls for domestic manufacturing, a more vigorous industrial policy, putting up walls and fortress-like policies. Because I said a moment ago, security actually comes from interdependence and interconnection. But if every country responds to concerns about geopolitical risk by trying to build domestic supply chains and do all the mining for critical minerals at home, and then the refining and processing, and then the battery manufacturing, that's incredibly inflationary. And that makes all the clean energy we're talking about that much more expensive. And so again, in the United States, you see an administration that admittedly has said, quite literally through reversal of the endangerment finding, we shouldn't worry so much about climate change, but has said, we're the largest oil and gas producer in the world, so security comes from doubling down on that. What are we doing all this clean stuff for if all of that is manufactured in China? So I say that only because in an example like Ethiopia, where I do think a country that's not exposed to shocks to the global oil market for at least part of its transportation economy can be more resilient, we have a whole set of other risks that we need to think a lot harder about how to navigate.
One of the ways in which I've been thinking about oil consumption reductions is this analysis from Kevin Book, an energy analyst, who calculated that about 1 million electric cars sold take off 15,000 barrels of oil consumption per day. 2025, the world sold about 20 million electric cars. And so you're taking off 300,000 barrels a day of consumption. Now, relative to 100 million, that's still a small number, but we know that the number of electric cars sold is going up pretty rapidly as well. But as you said, this is all happening as a result, at least the clean energy price declines are happening mostly because of China. We've seen in the examples of Pakistan, of Cuba, of Ethiopia, that for the first time in an energy crisis, developing countries have an access to an alternative. Yes, it might be China, but they don't mind the Chinese providing these supplies to them because they have political relationships that go deeper, or they're forming newer, deeper political relationships, as we are seeing in Brazil. You have looked at energy crises over the last many decades, studied them, used them for analysis, informed the US president based on your understanding of these energy crises. Are we now in a fundamentally different place, given that we have an alternative, at least for some part of the world, in a China providing clean energy very cheaply?
I think just to an extent, meaning that Chinese electric vehicles are quite high quality. They're quite cheap. And as you said, many countries are happy to buy them, although some of them, like Brazil, would like the manufacturing to be done domestically, even by the Chinese firms, in order to get the jobs associated with that come, and they don't displace domestic manufacturing. It is still really hard to displace oil in the global economy, and we're seeing that. All the calls for peak oil and the idea that we were moving to a post-oil world, and all those calls for peak oil demand are being pushed back, notwithstanding the advances that you just described, which are true in the pace of deployment of electric vehicles. The majority of oil use is not cars. It is for things that are harder to find alternatives for in heavy trucks and airplanes and industry and ships and other uses. But there's some degree to which, in response to higher oil prices, you're going to see on the margin countries and consumers and businesses make different choices. And, we've always seen, as OPEC has managed the global oil market for decades, this sort of not too high, Goldilocks, not too high, not too low scenario. Obviously, OPEC countries want to capture as much revenue as they can, but recognize that if you let oil prices surge too much, it's going to incentivize people to find alternatives. And that's what happened in the 1970s. When we had an oil crisis, in response to that, we not only tried to look for alternative sources of production in the North Sea, the Trans-Alaska Pipeline, but we pushed oil out of the power sector, which before the Arab oil embargo, 20% of American electricity came from oil. And we found that was a pretty low-hanging fruit to find alternatives to that. And for even an environmentally minded president like Carter, that was coal, was part of the way we did that for energy security reasons. Fuel economy standards, other things to find the low-hanging fruit of efficiency. And now you have that extra potential to do that because EVs are much more available and cheaper than they were before. So I think if we see this oil crisis go on, if it really becomes a crisis with prices in the triple digits, you'll see a surge in demand for that.
I want to end on trying to understand the American perspective on this war from two perspectives. First, we are going into the midterms in the US later this year. We know that President Trump's approval ratings are pretty low right now. And there is all this concern that a president who had said he'll not start any wars, and wars are not popular in the US across the aisle right now, has started a war, and that would have an impact on the outcome for Republicans going into the midterms. How do you see that playing out in the politics this year?
Well, the polling numbers for President Trump are not great. Much higher disapproval than approval. The political expectation, and this is not sort of my area of expertise, is that the Democrats would regain the House and maybe even the Senate now. And one of the political issues that's quite salient, and we saw actually play a pretty big role in recent elections in places like Virginia and New Jersey, was high energy prices, particularly power prices. High energy prices for a long time. And for people who study energy geopolitics, energy prices has always been about oil, gasoline, maybe natural gas, but power prices are a big focus now. We've kind of taken relatively cheap gasoline for granted for a while. President Trump has said he wants to see energy prices even lower and wants to make energy cheap for lots of Americans, even though that doesn't necessarily help U.S. producers or allow for continued growth in U.S. oil production.
But this war has now put gasoline prices at above $3 a gallon.
Well, that was my point, that, we're going to see gasoline prices go up 20, 30 cents, over $3, diesel up to $4. And that's even not assuming yet that we're going to see triple-digit surge in oil prices. That's going to become a political issue. And, I suspect it may be hard for the administration to explain to Americans why not just U.S. troops may be dying, but they're paying higher energy prices for this conflict in Iran, an attack on Iran, without as we started the conversation with, a real appreciation for why we're doing this and what the end game is. And so I think that high energy prices would just become even more of a political issue. We should note, by the way, that one of the consequences of this, I suspect, as prices surge above $80 a barrel, would be U.S. producers hedging and locking in those higher prices, because over the last decade, and when I was in the Obama administration and we were thinking about how to take Iranian oil off the market as a way to impose sanctions and economic pressure, one of the things that made that easier was the fact that U.S. production was growing 1 million or 1.5 million barrels per day every single year in the shale revolution. Those days are over now. Shale is projected to be roughly flat this year. At these higher prices, it could grow a bit, not 1.5 million barrels per day, I don't think. But, it's a different fundamental calculation. The politics are still true, where voters don't like to see high gasoline prices and it affects polling. But the U.S. is a net exporter. And so the effect of higher oil prices on the macroeconomy are not nearly as bad as they used to be. When some analysts argue they're even positive, it's a transfer from consumers to producers. And so it's a somewhat different calculation now, which I don't think in the U.S. we fully wrapped our heads around, that we're a massive petrostate and a large exporter. So higher oil prices hurt a lot of people, but they help some people and the overall economy too sometimes.
So to end the conversation, we are on day 4 of the war with Iran. We don't know how long this lasts. The president says it could be 4 weeks, 5 weeks, but as long as it's necessary. We know that going into the war, energy and the prices of energy played a role. Energy prices were lower. The US had become the world's largest producer of oil and gas, was a net exporter. We have seen in the price impact that decision sort of made sense, given oil prices haven't gone into the $100 region. Gas prices haven't reached in Europe $300 or more per megawatt hour. It's about 50, 60 right now. How does the end game play out, and how much does energy play a role in deciding the end game of this war?
I think energy is a huge factor. I mean, first, energy is a massive tool that both sides have to impose economic and military and political pressure if they want to. Now, again, they've been somewhat restrained in doing that. Potentially, it's I suspect because it's sort of a mutually assured destruction game, right? Iran has not yet really tried to take out in a massive way for the long term Ras Laffan, Ras Tanura. There's been some reports of damage, but to go after infrastructure or to really target tankers in the Strait of Hormuz, because as soon as you do that, the first thing that I suspect people would do in retaliation is take out Karg Island, which is Iran's production capability, and the Iranian government needs that oil revenue to survive. And vice versa. I think if the U.S. has not yet targeted, Iran is still producing, although it can't necessarily put it on tankers and access the global market because of the Strait. It's still producing, as far as we know, what it was before the conflict started. We haven't taken out its production capability yet. So energy is a tool of escalation that is sitting there waiting for either side to use. And as soon as they do, the other likely retaliates and does it as well. I think at the same time, energy is probably has the potential to be a tool of de-escalation, because I'm not sure what the willingness of people is, and certainly the U.S. public is, to cope with a real energy crisis, which Europe is well familiar with from what happened 4 years ago with Russia's invasion of Ukraine. We haven't seen that in the United States. We've seen low energy prices even throughout that crisis because we're pretty insulated from the global market. Obviously, oil is priced in a global market. I think if we see a real surge in energy prices because these installations, key energy installations, are attacked, or because the Strait of Hormuz remains closed for an extended period of time, it's going to put a lot of political pressure on leaders to try to bring this conflict to an end more quickly.
Thank you, Jason.
Thanks, Akshat. Thanks for having me.
And thank you for listening to Zero. Now for the sound of the week.
Isn't this disgusting? Why doesn't anybody contact the president? Why is he letting this happen to us?
That is a driver complaining about the long lines at a US gas station during the 1979 oil crisis. If you like this episode, please take a moment to rate and review the show on Apple Podcasts, YouTube, and Spotify. This episode was produced by Oscar Boyd with help from Eleanor Harrison Dengate. Our theme music is composed by Wonderly. Special thanks to Samar Sadi, Laura Milan, and Sharon Chen. I'm Akshat Rathi. Back soon.